everyone, thanks for joining. This video is a very brief introduction to a balance sheet. We did a session on income statement already. This one is all about balance sheet. In general, what is a balance sheet? A balance sheet is one of the core financial statements in finance, and it provides a snapshot of a company's financial position at a specific point in time. You always see balance sheet end of the year, end of the quarter, end of the 6 months. When you look at income statement, it's usually over a period of time, from 1st of January to end of December for many companies. When we talk about balance sheet, it's only one point in time. Yeah. So keep in mind, whenever you use balance sheet numbers and income statement numbers, you would usually need to translate the balance sheet numbers into averages to take start point, end point, and take the average to make them comparable with the income statement. As you may know, there is a basic fundamental accounting equation, which is assets equals liabilities plus equity. And if we look at the balance sheet in more detail, you have liabilities plus shareholder equity here, and you have assets, total assets here. How do we start? We have current assets. These are short-term assets like cash, accounts receivables, inventory, and then you have fixed or non-current assets. Difference is usually 1 year. Current assets, assets that are used up within 1 year. Fixed assets, longer-term assets like property, equipment, and intangible assets. On the liability side, again, you have current liabilities, and then you have non-current liabilities or long-term debt, and then you have shareholders equity here. And then, if you can see, the left-hand side should be the right-hand side, and that's exactly what we defined earlier. So here you have total assets, and here you have total liabilities plus shareholder equity. Yeah, you may be familiar with this, you may have seen it before. One thing, when we go into detail and when we look at company valuation, we usually combine those two and look at this under net working capital, fixed assets, and then here market value of debt, market value of equity. Yeah, not from an accounting perspective. The blue one is more from a finance perspective. And what we do as well is here we basically calculate the free cash flow from net working capital and the free cash flow from fixed assets. And that's to basically derive to our valuation. You hear many times that assets shows what the company owns and liabilities what the company owes, and the remaining value belongs to the owner's equity. I believe a better way to look at assets and liabilities, assets on the left-hand side are factors of production to make money. Factors of production to generate cash flow, to generate money. And then on the right-hand side, how I finance these factors of production. Yeah, so just to get an idea, on the left-hand side, how you generate value. On the right-hand side, how those factors of production are financed. Yeah, that's all about balance sheet that I wanted to cover for now. Thanks so much for joining. Talk to you later.